Taking a closer look at Snap, the Snapchat parent, up about 3% ahead of its third quarter earnings, which will be out in just a couple of hours. Company was hit hard by declining ad budgets amid high inflation and interest rates. It's lost 80% of its value in the past 2 years, and it hasn't seen the recovery witnessed at larger peers like, yes, Meta this year. The Street not too optimistic about its performance either. 24 analysts rated a hold, 5 a sell, and just 3 a buy, according to FactSet. Our next guest is among the few bullish on the stock. He sees 40% upside from here. Rob Sanderson is a senior internet analyst at Loop Capital Markets. Rob, welcome.
Hi. Thanks for having me.
I always kind of chuckle a little bit calling bulls contrarian because we're so used to it's harder to find people bearish on these stocks, usually not in the case of Snap. Why does everybody hate it?
Oh, well, they've had a lot of struggles. I mean, they've been underperforming in terms of ad monetization. You know, much of this has to do with changes that they've been forced to make to their advertising technology stack. And this is in response to the user tracking changes that Apple implemented late last year. And they've really struggled to get back on track here, and it's been quite disappointing. Management offered very bullish outlook before we started entering this period of elevated inflation, and that proved to be, really misguided, and credibility is an issue. So there's a lot of reasons why people are skeptical about where the company's position is, and that's where we land today with the stock.
Well, you're not among them, or maybe you are, but you kind of see more value here. You have a $14 price target. We were just speaking to the Attorney General of Washington, D.C. Don't know if you caught that, about how they're going after Meta for addictive apps for children now. I asked if Snap would be next, and he didn't rule out the possibility.
Yeah, not something that we've spent a lot of time sort of digging into behind the top line sort of headlines on that issue. So it's not something that I can offer much of an opinion on, unfortunately, but always something to watch. Regulators have a responsibility to keep people safe, and it's something that should be expected with the entire space.
Is this, Rob, it's Dom here, I'm sorry. Rob, is this a situation where Snap is in your opinion, the best one to capitalize on this? You mentioned kind of the macro trends. I remember earlier this week, analysts over at Stifel have upgraded Pinterest to a buy from a kind of hold rating. And one of the things that they cited was this better macro environment for digital advertising. So is it just that Snap is going to be better positioned from a valuation perspective or from an execution one, or a little bit of both?
It's more of a turnaround, Dom. So, they've been, like I said, struggling for some time. But if you look at social media networks, the lifeblood, the thing that really keeps them going is user engagement and user growth. And at Snap, these appear to be very solid. And, in the recent internal letter that they offered for employees, and the company understands that these things are going to get into the public domain, they offered pretty robust outlook for user growth. We have to infer from that trends continue. Now, the advertising technology is something that can be fixed. You can improve monetization. It might take a little longer than investors were hoping for, but it's a lot more difficult to turn around engagement. That's the lifeblood. That's what that keeps us interested in the stock, and that's really what's going to lead a turnaround is building off a base of highly engaged users, improving monetization, and improving their technology stack.
And so that's what you'd be listening for as they report, Rob? What would be kind of the entry point? Or obviously, it sounds like maybe now is that one, but also the fundamentals that would make you feel confident in this buy rating.
Yeah, it's got to turn into accelerated revenue growth. And it doesn't sound like the near term is all that robust.